Hello everyone and welcome back. Well, we've got a great video today. Of course, we'll be talking about stock, commodities and cryptos in the markets, and specifically we'll be focusing in on some of the indecision that we've seen over the last 24 hours of trade. Hopefully we get a decision made, whether that be bullish or bearish, we don't know yet, but certainly there are some signs pointing towards those directions. So sit back and relax as we go through the markets and break them down together right now. See you soon. It's going to be a great one. Welcome back everyone to our daily market recap show here to do with stocks, commodities and cryptos. If you like any of those markets, please remember to subscribe and smash that like button if you find value in today's video. Let's take a look at the S&P 500 here, and straight away you'll notice certain sectors were doing well. Semiconductors, energy, financials, thanks to Bank of America's report, and a little bit around tech. Other sectors not so good. So is it risk on or risk off? Not really clear on either side. The market just picked certain areas it was willing to buy for that session. The market session was up, it was down, it was up again, down, and then up at the end. This caused what we call the long leg doji. That is an open and a close at the same price, a high and a low. And then we look towards a breakout of that high or a break below of that low to give us direction in the next few days of trade. As we said, sectors, semiconductors was the best, but clearly it wasn't a risk on or risk off. It was just more of a flat rotational day. So a lot of the discussion right now is about whether we're going to see inflation last. We know that Shanghai is obviously in lockdown, so this chart might look a little bit different, but in general, the trend of shipping rates, that is one of the big problems that was going on in the world, actually was declining since late last year. That's a good sign for, of course, the war between the bulls and the bears from the inflation standpoint. And we know that currently what's happening, the US 10 years getting out of control, inflation's very, very high, and we know that the Fed are sitting around here saying, oh, it's not transitory anymore, guys, don't worry, we'll raise rates. Now, I've come to the conclusion, I think a lot of you are starting to do that, is the US 10 year will probably overshoot. That is, it may go to 3%, it may go even higher. But as the Fed starts to raise their rates, remember what the Fed can do is they control the demand side. Depending on what happens in China, that is, do they continue a lockdown or do they start to open it back up and just allow, the COVID stuff to play out the way it's going to play? That will probably really, I guess you would say, change the supply side. So depending on what they do there, if they open up, the supply side might be fixed to a degree. That then could, of course, also decrease shipping costs. And then if the Fed are working on the demand side, we might get some yin-yang harmony here, and the US 10 year actually might come down while the Fed are raising rates. This is a story that will play out over the next few months. And of course, we'll be answering this and talking about it on the daily here on the channel. It's very important. But for now, there actually was a good sign here that inflation might have been coming under control. Another thing that people often underutilize in the market is sector rotation. We talk about it a lot. Obviously, I teach it. The reason why is because this is what the big guys do. They all rotate through and they understand that money flow and money rotation is super important. Take a look at this chart. S&P 500 excluding tech and communications relative to the QQQ. So it's actually bounced and it's found a really nice level of accumulation. It's kind of breaking out right now. So is that, again, more of a sign to things to come? Outperformance by the broader market in comparison to, of course, tech. An interesting point, and it's right around those highs in terms of 2-year relative highs. Inflation, where it was then and now. This is another thing that people bring up. Is it really high? Yes. Is it higher than the 1980s? Well, here's the 1980s versus 2022. You can pause the video if you want to take a look at this one, but just an interesting chart. Doesn't help us too much, of course, on the current investments, but certainly interesting to see where it was and where it is now in relative terms. Now, what is interesting and what we need to know is the earnings. We have a big one coming up, everyone. Netflix on the Tuesday close, the first big tech stock. Will it perform or will it go down? Remember, Kramer told you all to love Netflix last time around. It wasn't so good. I'm not sure what he says about it now, but Netflix will be coming out with their first earnings, and that set the mood for Q1, as in Q4 results. So the Q4 results, Netflix didn't do well. It wasn't so good. We've got Tesla coming after that Wednesday. I expect Tesla to possibly coil until that time. We'll take a look at it on the charts today. And then we've got Snap as well, and some other big names such as American Express, etc. So it's a big earnings. It's not the biggest earnings week that's coming in the next couple of weeks. But I'll tell you what, there's still some big information. And depending on how Wall Street wants to interpret that, I think that doji is going to be broken and we're going to move in that direction. So remember, Tuesday after the close, pretty important. Netflix is coming out with the result. We also know we're in midterm election years. So far, we've kind of gone down, similar to other years. We've rallied, similar to other years. And then we've declined, which is not necessarily the same as other years. You'll notice we declined more than we maybe should have. And will we see any continuation bullishness? I think all of that comes down to earnings. But what we know is that 2022 is a trader's year. Midterm elections tend to have double dips. That is, they rally, they decline again sometime later on in the year. Maybe even that's happening right now. And then they recover, and we usually go into bullish periods later on. Remember, everyone was concerned about the US 2-year, that is the 2-year, 10-year inversion. That's just a canary, and it didn't hold for long. Right now, the spread is a lot different, so we do need to keep that in mind. VIX, volatility index, the fears come out of the market a little bit over the last 24 hours. We're obviously stuck here in a bit of a coiling range. What will happen if the market breaks under that long leg doji? Expect the VIX to increase significantly. If it breaks to the upside, expect, of course, the VIX to come back down. So not too much information coming out here. Go to the US 2-year. This is something that I am watching very closely. We noticed that the 2 years hugged fairly well the daily here of the 20 moving average. That's the red line. If we see a decline, that is a peak, a trough, a lower peak, and a lower trough, is that possibly the first sign that technology might be coming good and the rates are coming down? Well, certainly something that you need to watch. 2-year and 10-year, keep them on the charts. It's going to be super important for us to be aware of where these rates are if we're making investments in sectors or particular stocks for the year ahead. PCC did rise. That means more people were placing bearish bets over the last 24 hours. Something important to note. Remember, if everyone gets bearish on something, what usually happens? It turns bullish. So we'll continue to watch that, stuck in the middle of the zone. And for now, it looks like the US dollar is continuing to see an influx of money floating into it. Now, when people move into cash, often it's seen as a bit of a negative towards markets, or at least uncertainty. Generally speaking, if the US dollar is strengthening heavily, then you need to look at that and say, wait a second, why is that happening? Now, it's partly due to stuff in the world, but also I think because of uncertainty into markets. And we're seeing markets going down at the moment and a rising DXY. If we start to see that drop, that could also mean that money's flowing out of here and going into risk on assets. So if it happens with the 2-year, obviously an important point. Gold, another one that has had some really nice rises in it recently. It just got close to 2,000 an ounce here, you'll notice, to the US dollar, and then went straight back off that level. Now, we've always said, since we bounced through this area, our aim was 61.8 fib around the 2,000, which it got, $2 within, to the 78.6. Is gold over yet? Probably not, but it's not as clear as it was. I mean, it did rally and it's been looking very, very strong, and then we suddenly got this rejection. So you've got to be careful now in something like gold. It's on the previous resistance acting as support. It needs to hold here, and of course it needs to find buying pressure. So if you're a scalper or a day trader, you're looking for it to break out of this kind of range to show you your signals, and then of course hopefully move up towards 2,000 to 2,050 an ounce at this stage. So gold still in an uptrend, but not as good as it was over the last 3 to 5 trading days. Let's now move over to US oil. Now this looks a little bit better than gold. We broke out last week, 12th of April, showing that downward trend, breaking through the previous supports, resistances, certainly a lot stronger here. Let's have a look at WTI just so we can get a bit of an idea on exactly where it's at right now. We'll just use this one. And you'll notice it's really trading up, and it's starting to buy fairly well through these charts. So we're sitting at 108 actually now on this. Again, the downward trend, the current resistance seems to be making a series of higher lows, quite strong for this chart. So looking much, much better. And as we move through, what's the next level? Well, you'd think it's around that 112 here in terms of resistance. So certainly a series of higher lows, strong buying at this point. I'm not seeing too much weakness in the commodities trade, that is oil at this stage. The breakout seems to be intact, and the strength seems to be there. Let's move over to Tesla. So we know we have earnings coming up. It's coiling into earnings. That is remaining between the 1,026 resistance, previous support, and the 975, 980 support. We're stuck in the middle of that range. Now, if we break out, of course, earnings is ultimately going to have the control of it. But at this stage, we're stuck in here and we're looking for either a breakout to the upside or a breakout to the downside. Downside's going to put pressure on 940, 945 almost straight away. And you would think upside puts pressure on that 1080 level. And that's going to make sense a lot when we start to look at where all the options are. So you can clearly see it's mostly options bull bets leading into the earnings report. So we've got options bull bets sitting around 1050, 1080 to 1000 or 1100 kind of strike. And then we've got that 1200 strike as well. So most retail traders are going bullish here into the earnings. And that's where all the calls are at this time. There's not so many puts on Tesla, but I thought you might be interested in that for the expiration this Friday. That's where we're looking at this stage. Move over to Apple, not looking so strong here on the chart. It struggled to really find any rallies. Every rally it had was sold off. Previous support here, they sold the rally. So for Apple to look better, it's really going to need to break this downward trend. That is the trend that goes through there. And I don't know if this chart's incredibly clear at this stage. I'm not sure if you're looking at Apple saying, oh, I think that's great. But when I look at that chart, I'm like, it doesn't really give us much clarity. And I don't like it when we don't get clarity. When we might have some more clarity is when we start talking about consumer discretionary. So consumer discretionary, everyone, this is actually looking better than it was a few days ago. We've had a big sell-off. Of course, a big pullback here, not really a strong support or anything on consumer discretionary, but we've tried to sell off a few times, and each time we find rallies. Imagine if we were able to break past this 182 area on XLY. That would be fairly significant and kind of showing, again, risk on. Remember, consumer discretionary, 1/3 of the US economy is spending, really. It's basically consuming. So if we see it break out, what does that tell us? Maybe the risk on trade is back. And at this point, it's not back, it's not on or off, it's waiting for earnings and it's coiling within this range. So watch the 176, watch the 182, and I think breakouts either way will probably show us a truer kind of trade of trend. But it's holding up better than you would expect here from consumer discretionary. And that's thanks to, of course, Tesla and Amazon. Let's move over to the DAX. DAX just kind of holding support. Nothing much to state here, so we'll skip over that one. The IWM Russell 2000. This is the smaller cap companies for anyone that doesn't know. It doesn't look very strong. It kind of found resistance at this 202. It's sold off, and now it's barely rallying around this point. We'll move over to the NDQ. So the NDQ long leg doji, we have the low, we have the high, we have the open and the close. We know where the high is, 14,000. No surprises there, yeah. Big psychological level. We know where the support is. It's around that zone down here, which is, of course, the 13,800. So we've got a 200 point, no surprise on the Nasdaq, 200 points. They love that. Between each one of the ranges, a close below 13.8, bears are in control. A close above 14,000, bulls are going to try to pressure it up here to the 14,260 zone. So that's really what's going on here. The market is undecided about what it wants to do. It's awaiting the news, being the earnings. And when we get that earnings, I believe it will move to the next direction. What do you guys think? I mean, it makes a lot of sense when you start to look at these candles. The 4 hour on the Nasdaq. Look at this. Every time it rallied, they sold it off. Every time it went down, they bought it up. They don't know where it wants to go yet. But once they make a decision, they'll push it to the next point of resistance, or they'll push it down, 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 and the bears will be in full control, which seems to be who's in control at the moment overall. And for the bulls to really say, oh yeah, I think we've got this, where are they going to need to push it? You're going to need to get past this resistance. Why? You break all the downward trend, you effectively create a trough, probably a peak at this point, a higher trough, and then a higher peak. Something like that sequence makes the most amount of sense for the turnaround. And it doesn't mean that you have to get the best price. Remember, guys, over here, did you know that this was going to be the low? No. Did it become more clear here? The answer is yes. We made a little double bottom and we began a very nice rally into around this area where, of course, things turned out bad and they started going back down. We had the peak, we had the trough, we had the higher peak, or lower peak, and the lower trough here. Suddenly we begin a sequence of shorting. So you're really looking for those turnarounds, and you're trying to get into, as for lack of a better term, the party. You want to enter the participation phase, whatever you want to call it, mark up, mark down, as Wyckoff called it, or any of those things. That's where we want to be. And if you can start to see that with more clarity, grabbing that area can be the best trade. Again, if you've been doing that for a while, post in the comments down below, help people out to understanding that that's the way the market works. If you just keep buying the dip and you say, I'm buying all the supports, you're more of an investor. A trader looks to take a portion out, and that's usually the easiest portion to see. Let's move over to the S&P 500. We've got the high, we've got the low, and this is where you'll start to see the traders are super sneaky. The open and the close sitting right around that 40, kind of 400, just under 43.90. So we closed at 43.90. Let's now have a look at where max pain was for the day. So if you notice here, the 18th of April, where was max pain? 441. We actually closed at the end of the day, 440.19. Funny how they do that, yeah? Sneaky, sneaky. They managed to almost extract maximum value out of the options expiring on that day. Now, if we scroll over to the Friday, where's the max pain? Here's where the bull case can be made a little bit more closely. If we continue to see an increase in puts, which we have over the last 24 hours, will we get the max pain of 447? Let's go back over to the S&P 500. Let's check this out. Where's 447? Resistance, previous support, right around where the previous resistance was. So if things turn out good, that is, earnings aren't that bad and the market gets excited and everyone feels great, we might actually double bottom here on the small time frame. Remember, it's the 15-minute time frame now. We break through this resistance and then we rally into the 44.60. Does that seem plausible? Causing us to hit a resistance and make maximum profit from the options expiration. Call me, some kind of conspiracist, but that's something that's been happening very regularly here now for a few weeks. We've basically hit max pain almost to the T every single week now for a few weeks. So this is something where we're at support. We're seeing current buying momentum off the bottom. It clearly has no idea what it wants to do next because it's a long leg doji. But on the small time frames, does it want to go bullish? Does it want to try to attack that 44.60? Well, from a technical level, it possibly could do so. Now, if it breaches through 44.60 and starts to go bullish there, you'd think the bottom was in. For now, anyway. Because, of course, that will be double bottoming, very fantastic, broken the downward trend, new kind of lightning bolt at that point, and we're moving towards the bullishness. I think that's where it becomes clearer that the bulls are entering the participation zone. But certainly for the bears, all they want right now, push it underneath so that when it rallies up, they can sell it. Think about the current points. Peak, trough, lower peak, lower trough. We reported obviously at the lower trough here on the channel. We talked about this. Sell the rips with the philosophy. Bang, sell the rip. Bang, previous support becomes resistance. Resistance again, sneaky on the Thursday. And now we're at the support. So, of course, if it breaks underneath here, what do we expect? Bang. It becomes fairly simple. It sucks, but that's what happens. It's not about our opinion of what's going to happen. It's really just what the price action's telling us. So the max pain sitting at the resistance. If we breach the resistance, let's say heading into what could be an optimistic week now all of a sudden for technology, and we break through and Q1 is not so bad for Microsoft, Apple, and the rest, could we actually be rallying? There's a case here for the bulls and the bears, and it's up to you to navigate the waters. Possibly that's the best trade for you. Or maybe even the scalp up. Or, of course, the breakout in the future. It depends what type of trader you are, but all of them are very valid. And, of course, it's not so much all these random prices in between. They're the key levels that are showing in this market. I think you guys can probably see that. Let's move over to Bitcoin quickly, discuss this. I've talked about it for a while. I think Bitcoin's a little bit unsure. It's mostly a risk-on, risk-off asset. That is, if the stock market starts to go up, specifically the Nasdaq, I expect Bitcoin to also rally, and therefore Ethereum and others. We are kind of in the crypto winter right now. That is the period of kind of here, about that 600 days after halving to around that 950, 1,000 days after halving. It's historically been a terrible time to be in Bitcoin, in crypto in general. Now, it may not follow the same principles as last time, but it seems to be at this stage. And you've got to be aware of that when you're looking at the crypto markets. Therefore, you may need to be fast and nimble and quick. So let's have a look at the current chart. Well, it's held up barely. I mean, Bitcoin, just barely. It held that trend line from the previous sessions that we've discussed it. Look at this thing. Could it create a double bottom? Well, certainly it's doing a better job right now than the market itself. So at the time of this recording, we haven't got a double bottom in the little miniature market. We don't have it in Bitcoin either. If we break through this little resistance here, then we can start to talk about rallying back to the 45,000 mark. At this point, it's holding on for dear life, literally hodling on those Bitcoins. BTC shorts coming down a little bit over the last 24 hours, showing us that the nasty whales have slowly reduced their bearish positions. Again, we'll have to keep watching that. And Ethereum is holding as best it can. Very similar to Bitcoin, basically just holding up against the previous resistance, becoming support. We don't have the rally through of the previous high yet. So really just a battle on the timeframes there. If you haven't already, follow us over at FX Evolution on Twitter. That will certainly help us out. And just remember, the economic news this week is less about the US, except for on the old Thursday here, we got Fed Chair Powell coming out to annoy us all with his discussion about tools and all the things he's going to do that are supposedly amazing for the US economy. And that's at 1 p.m. New York time. But other than that, it's mostly the markets left to their own regards, left to earnings, and we'll find out whether earnings are going to hold up. Thanks so much for watching. If you enjoyed today's video, please subscribe, smash that like button. We'll see you in the next one. Bye for now.